Hello and welcome back to Almus Market Mornings, folks. After the long weekend, and this is your daily dose of financial update with me, Shikhar Garg. Now, over the weekend, a lot of things have happened, and not just the weekend, even prior to that, as India, uh, you know, subjectively bans wheat exports, while we've also seen some comments flowing in from Jerome Powell. Crude prices rising above 110, 113, and a lot of data points also released. So, JK, what do you think? What is going on in the markets? We've also seen USD INR breaching higher in the NDF market. So, what do we expect out of these kind of moves?
Good morning. Market is closely watching the US yields, and that is showing some sort of dropping. 10-year is now steadily holding below 3%, and some of the inflation indicators, as we have already touched upon in the previous updates, have shown some sort of moderation. We'll of course look at more evidence if inflation is actually peaking, but Fed language has not changed. Fed is still very keen on fighting inflation with strong measures, and that includes interest rate hikes at hefty pace and balance sheet reduction. We will have some 5 Fed members speaking today. Obviously, everyone will look at their language and what they think about the future course of action by Fed. So this sort of kind of mellowed expectations on the yields, also with the fact that some of the indices have broken down quite a bit in the recent months, has tempted again the investors to do bargain hunting and also buy into some stocks. So yesterday, of course, Dow alone was in positive territory. S&P 500 and Nasdaq are still negative, but I think looking at overall price action in other markets, market is close to seeing some sort of a bear market rally. That's the sense I'm getting. Even if we look at the currency space, you have a market where big falls have been seen in the last 1 year, like early 21. Since then, Euro has fallen almost 17%. From 1.2350 to 1.0350. GBP has fallen 17%, yen has fallen 28%, and gold has actually fallen again nearly 10%. So these are levels where probably people tend to take profit, because it's been a hefty move for medium-term guys who look, who trade on a slightly longer-term horizon. These are levels, particularly when Euro is trading at the low seen in 2017, and dollar index is at a 20-year high. Dollar yen itself has been at a multi-year high, and also there was a trigger from one of the Eurozone official who said that European Central Bank might be slightly concerned about the Euro's weakness, which can threaten the price stability in the currency bloc. So that also gave some push to the Euro upside, and obviously Euro being the bellwether currency, other currencies were also pulled up. Chinese yuan unable to break 6.85, which is a big FIBO level. All in all, moves in the latest sessions are kind of technically driven, not so much on the fundamentals, which seem to be well discounted. So this can continue. I feel dollar index has a potential to retrace about 1.5 to 2% from the highs of 1.105 seen, and the Euro might as well retest 1.0650 or a little higher. Also, you see, we have the adage which says sell in May and go away, but market has already sold. But so now probably they will leave the position and go, or cover back some profit and come back in post summer vacation. That is something to be seen. So we are almost in the 3rd week of May, and we may see some sort of consolidation in the market before excess positions or excess short positions are covered by the market, and then going to the summer break. We will assess that is the sense I'm getting in the medium term. Maybe post summer we see a fresh rally in the dollar, or a fall depending upon how the relative policy approaches proceed. So looking at that currency space, we see some recovery in all currencies. And USD INR, obviously in a thin market, NDF, we had seen it trade as high as 77.87, well above the level at which RBI was seen intervening in the last few sessions. Surprisingly, there was no selling in the NDF market because market was reporting that RBI had been active in the NDF market as well, but that was not seen much. There's some retracement only after the euro and other currencies have recovered. Might have been a factor that stake buy from one of the large corporate conglomerate in India from a foreign entity might have led to some buying in the dollar rupee, thinking that there will be some outflow, but there is no clarity as to how the stake purchase will be funded. Might well be funded from abroad, so it's not clear. We are at new historical highs for the USD INR, but I do not think that we'll run away from these levels, and might well see the central bank intervening once again to rein in the dollar or slightly keep the pair subdued and allow it to drop somewhat, and then see the natural market forces take over only from the lower level. So I expect a correction in the USD INR if it opens anywhere near 77.80. Difficult to see it breaching 78 without any fresh negative triggers. Yes, of course, oil again trading at 114, that is a Brent, and that is not good, but that's something which has been having its influence all along, and that is why we are seeing this high demand in the market. So all said, rupee market, expect a range between 77.30 and 77.85. Thank you.
Okay, that was quite wonderful, GK. So what we get is there is a possibility and good likelihood of corrections coming in across, as we've been seeing over the past few days, some sort of decadal moves happening, and even the anecdotal evidence show us that now a lot of these kind of fundamental updates have been discounted. So as JK mentioned, we're observing a lot of corrective or the technical moves happening, and possibly we might see some bit of good corrections. So now is the time we can go ahead with full force on our risk management activities. Hope you guys are going ahead with the same. We catch up again tomorrow morning. Till then, we say goodbye. Thank you so much.